Hi, everybody. Yeah, Paul, tight range and cable, most likely because of the Fed tomorrow. But hi, Bran and Ryan. So the market's up into the Fed's face.
Morning, Dale.
He's going to have to be real mean tomorrow. Don't you think? He's going to really be the meanest man he's been throughout his tenure tomorrow.
Well, you mean it's going to be Steve? Good morning.
Steve, Mr. Empathy.
Yeah, exactly, Mr.
He's like Spock. All right.
That's what surely was on his high school yearbook. Mr. Empathy. That was it.
Mr. Empathy, because empathy is an emotional response, and he said, I have empathy when it's logical to be that way. That's what he says, not logical. Anyway, Steve, good morning.
We do love him.
Yeah. Ryan, things are working. Was BOJ part of this little sell-off that we've had here or not?
Yeah, well, we had Suzuki all admitted that they're now sort of doing stealth intervention as opposed to sledgehammer intervention.
Okay.
Yeah, but it's a bit of a double whammy because we had this rumor out of China about them potentially forming a reopening committee to look at coming away from their zero COVID policy in the first quarter of 2023. That gave a lift to risk. So a bit of a double blow. They seem to catch the most opportune moments, the BOJ, don't they?
Oh, surprise. So in Aussie,
Yeah, RBA hiked again.
RBA is tonight?
No, it hiked 25 pips.
Oh, that was expected.
Morning.
Yeah.
Yeah,
okay.
as expected. They're going to keep hiking. They haven't shut the door on going back to larger hikes either.
Okay. And, Canada taking it on the chin, approaching the 135 level.
Yeah.
I don't know if we're going to go to 38 now. And this surprised me. It's a pleasant surprise. And the lesson I learned, and it took me a long time. Okay, so you have to know what you could go to sleep with and not worry about what you see on hourly charts and even your dailies when you're building a position, because you know how many times I could have blown out my minors in the last few months. I mean, especially, after we had this. Okay. And, I was looking for this. I'm not so sure anymore. And gold, same thing. I was looking for this. And maybe what we're going to get is what Welsh talked about, that this was A and this is B, and we're going to get a C back up into this range here. And then S&P is up in the Fed's face, making new highs going into the Fed meeting. I still think that he's going to cause some downdrafts in the market, even though we're railing into the Fed instead of what you thought people would be liquidating in front of the Fed. So they're challenging him, aren't they? And what about this into the Fed? Down 10 bips, and so far a failing rally. I mean, looks kind of like this, doesn't it?
The problem we got is that this is a very choppy week, a very chunky week. We got the ISM today. If that collapses and employment collapses, everyone's going to come out with a pivot again. But if it's strong employment and a strong ISM, everyone's going to go the other way. Your yield will jump and the dollar will jump. This is all moving the chess pieces around the board in terms of what happens tomorrow. And we've seen the swings in expectations between last week and this week, and they're going to continue on the data. So that the data is going to be very important because it's going to potentially have a lot of volatility in it.
And then yesterday, Ryan, before this happened, I believe I said that I think cable should hold 1450. Not get deep for a continuation move. And that's exactly what it did.
Yeah, you're looking at that moving average.
Yeah.
there, weren't you,
Well,
as well?
I just kind of saw 1450.
Yeah.
This is, pretty important support. It looks equal, ABC, and maybe we're headed up to 119 now. Um, and then I just want to show guys that if you don't want to chase wheat, and you don't have to buy the bottom of these markets. In fact, wheat's going to be down a little bit today, but it's bull flagging. But the beans came out of it yesterday. They're up. This was yesterday. This is just starting. Um,
Do you look at
it's
coffee
not,
at all?
huh?
Do you look at coffee at all?
No, I didn't like the New York cocoa, coffee, cotton. No, I didn't really. I traded cotton because cotton kind of had a correlation to the market. But
Yeah.
no, sugar, yes, but they're pretty, you know, uh, big markets that have sometimes some very huge moves. So um, I don't know. I just had a negative feeling about. I forgot the name of the floor. It wasn't on Comex. I forgot the floor that they traded that on in New
CBOT,
York.
wasn't
But
it?
no, it was what?
CBOT.
No, that was the Board of Trade in Chicago.
Oh yeah,
So
that was. I've
okay,
forgotten
so
as well now.
anyway, yeah. So um, look at the beans. All right. So this was before the invasion, right? And big ABC held 14. If you even go further back, you'll see why that low held at 11 and a half. Okay, well, I guess you can't see. But anyway, beans just coming out of the hole here. And I think that they're, you know, it's protein gold. So if you're a gold bull, this is the grain you go for. I think there's going to be a lot of, this is the comeback of the part of the commodity complex that the Fed has no influence on. I don't even know why grains came down when the Fed started tightening. I didn't eat less tofu or Wheaties. How about you? Did you?
Can't
Because
stand the smell.
mortgage rates doubled. Did you stop eating? Period.
I ate
Yeah.
more.
So anyway, these look attractive. Kind of like I think they even have ETFs on these, so you don't have to do futures, and they're not leveraged. So that's another way to go. So K-Man's here. Haven't heard from him. Hope your
Hey,
doctor's
hey.
appointment went good. And he said you have another 50. You only have another 50 years. Is that what he said to you? He
How
give
are
you
you doing
50.
there?
Good. I'm doing good. So what are your thoughts? Are you out of step a little bit with what's going on because of yesterday?
Yeah, I wasn't patient enough yesterday. I did sell a couple of dollars and then it didn't move for 11 p.m. And I went out and this morning it would have been great position. So I need to work on my patience.
Oh,
Um,
it's a
but
life lesson.
yeah, and of course we are pre-FOMC, a bit of positivity on the metals as the hope for a China reopening got a little bit of a lift there, although officials didn't really want to comment on it. But yeah, I mean, if you see like gold a bit higher, silver did a really nice bounce. Broken through a very short-term channel there.
Right here.
The top, yeah, was around 1975.80. We're above. I wouldn't rule out a move back into the 20s on a bit of hopium in there. Gold is less
Bullish.
clear, in my opinion. We still need to, yeah, there's your blue line, and then there's already somewhere in the 1960s a bit of resistance. It's less clear to me. But yeah, for the rest, I'm really waiting for what the FOMC will bring tomorrow. It could be a very big event. We already have a few more data today, so expecting the market to jump around really until tomorrow. Firmly hoping on a pivot again. It it could be that Powell is starting to walk a finer line now, because we've seen already 4 other central banks starting to walk the same line, RBA included overnight, just going on 25 BPs, where some of the market were thinking 50 was possible. So yeah, I mean, I'm not inclined to do much before the FOMC.
Yeah. If you didn't catch today, why do anything? Gold silver ratio on the verge of a major breakdown, in my view.
Yeah, I kind of like it. I still would be more positive towards silver than gold, seeing its industrial usage. So if we get those China reopenings and a bit of a softer tone by the Powell man, I think silver really has a potential here, especially that we see those 2-3 attempts around the 18 bucks, and then we held just below the 19 bucks, and yeah, it's looking more promising than gold, in my opinion. It's going to go faster.
Yeah, I have to hand it to Peter Bookvar, who likes the metals, and when Peter was on, I said, you know, the metals look vulnerable for one more low, and he came back without hesitation, said, I think it's a Head and Shoulders bottom. It's coiled like a spring. It's going to explode. So kudos, Peter. And so that looks to be the level for a neckline, you know, about $21 or so.
Yeah, 21 bucks is always gonna. It's always been a bit of a crossroad, right?
Yeah, it was. Look here, tried to hold, and all the way back here, look left, as Blake says, but back above it. Then you're talking about measured moves up to like 24 or so. Anyway.
By the way, I just want to answer a question. We've got it a few times recently. The recordings of the Trader Summit are going to be available very soon. We're finishing up the videos today, so hopefully tomorrow, maybe day after, maximum, you're going to get an email with the links if you had registered. Just wanted to point that out.
Did the censors go over and edit the debate?
No.
Huh?
I don't
publish
know.
It.
I have to view it. I don't know.
Oh God! All right. Last Christian I throw to the lions. Anyway, that's what I felt like. You know, threw him to the lions. Poor Danny. Anyway, yeah. So the Fed meeting is going to be a real interesting day. I thought everything would come in red going into it, so you know, it has me flat-footed here. But I don't know. I guess once in a while it really pays to have an opinion and have conviction and not worry about, you know, 5-10% moves if you're not leveraged. And I will say something about the miners. You may not be buying them on margin, but you get 20-30% moves a lot. And you can get doubles and triples a lot too. Yeah. So, you know, it's not like, you know, you're buying a bond. That's for sure. Well, buying a bond. So, you know, Joseph Yang had something interesting. I get his emails from his letter, and he was talking about, maybe you know about this, K-Man, some type of facility that's going to create support for the bond market, and actually is a form of QE that actually comes from the Treasury. Anyway, it's worth a read. Going to his website when he was here.
Or how about Dale?
The Treasury buybacks.
Dale, how about going to the Trader Summit website, because it's posted there all the time.
I've got it here.
Oh, his you mean his newsletter?
Yeah, his newsletter. We posted there.
Okay.
On
There we go.
Summit.
I put it on the chat.
He's talking about Treasury buybacks.
That's what he's talking about. But it's like, you know, it's not like the Fed doing it. He brought up something about the Treasury.
The Treasury shortening duration if they would do that.
I see.
They would buy treasuries and issue bills.
and I believe. Well, go to Trader Summit and read about it. I'm not going to read your bedtime story, everybody. Go read yourself. Go do it yourself, man. You guys can't get spoon-fed everything. You have to work hard to be good at this. Boy, am I tired. So, Blake, you sound better today.
I sound a lot better today. Thank you very much. I've actually got my head on straight. It's been a hell of a last couple of days, or last couple of days. I guess, Steve, I would say last week. We've had a great time. We did some trick-or-treating last night. I think
oh my gosh.
We really I'll show you a picture of Steve and his friends that were in. Let me see if I can do this really quick. Well, here I'll take you guys over to the chat room because I did post this in the chat room. Let me see.
Grab the screen, bro.
Yeah, so you guys, if you're on the tradersummit.net site, there's let me see, where is Joseph Wang's article? I know Steve or Stelios, you just posted it, but you see these are like new articles that are posted every day, and I believe it's right here. So you can always go to tradersummit.net and find out the latest articles that have been posted by some of our guests that have been on at the event or work with us as well. I wanted to show you. Here's Halloween. Here's a little Halloween picture of Steve and his friends that came in from Washington D.C. They've been celebrating with us all week. This is a Halloween party I took them to, and then we went trick-or-treating last night. Then they flew off to Washington D.C. and Steve and his family are still here. It was a lot of fun. And I think we showed them how we really do it here in the US, Dale. So
yeah, Steve looks like he really takes to that costume.
No, he has the whole ghost.
Look at
this is a Ghostbusters. This is a Ghostbusters, like he's got a real gun and everything, like the whole a photon. What do they call it? The photon pack? I forget what it is. Something like that.
I hope he reverts to his old pleasant personality and isn't just a Ghostbuster from because his face, he looks like he has assumed the identity of Dan Aykroyd or someone. Anyway.
I Steve, I'm going to brag on Steve a little bit. He actually had a lot of fun yesterday. This is the ForexAnalytix chat room, by the way. One of my buddies came over and brought his McLaren over, and so Steve got to drive this $300,000 supercar around town a little bit yesterday. I think that was the highlight.
Did he get any tickets?
No, he managed not to get any tickets. So yeah,
look at that beautiful weather he got.
Yeah, he's really getting to enjoy around here. So anyway, we had a lot. We've been having a lot of fun. I kind of got my head back.
Yeah, we have been too, watching you guys have fun. We're having a lot of fun.
Hey, any of the ForexAnalytix team knows you come to Arizona and we'll have a good time. Anyway, this is gold, and I think this is worth noting today. I know you were just talking about the gold miners. We have a nice inverted head and shoulder pattern, but in a bearish wedge. So you got to be a little respectful of that. But I think it's good because the setup is there going into the Fed tomorrow. So if you guys want an actionable idea post FOMC, I think you're either long above 1680 or you're short below 1610. I mean, that's really what it comes down to, right? Yeah. So you're going to know following the FOMC tomorrow what to do. You got the Fed that's kind of they're in their blackout period. They're playing into this we might get a shift. We've sent the Fed whisperer, what's his nuts, Timmy
Leaks.
Timmy Leaks, sent him on a little bit of a mission to get the, even like look at what's happened, right? I don't think the Fed's going to change their course, but what has happened between the time that Timmy Leaks came out in the Wall Street Journal and said that the Fed might have this dovish shift? What's happened between now and then? Stocks have done what?
Up.
Yeah, they've rallied. So now that the Fed has given them a new buffer by getting a stock market rally, so they can come in and not do anything different. And what do you think is going to happen? the dollar could really potentially set up to rally again. Stocks could sell off, and the Fed just engineered a nice, let's just say it's a nice, I don't know, 6-7% bounce, ahead of the meeting. So then they continue to stay hawkish. They don't change their messaging. Stock market comes down a little bit, but then you get, no harm, no foul, right? I mean, I'm not saying that's going to happen. I'm just saying it sure would make sense. Now, what I just did today is I closed out all of my dollar longs. But even though if you're a ForexAnalytix subscriber, we still have patterns in play. You can see them here. Or excuse me, I just closed out my dollar shorts. I just closed them all out this morning ahead of tomorrow. Took some profits off the table because I don't know what to expect. I don't know what we're going to get tomorrow. But I think we could argue that we have a setup in either direction with gold. And I think gold's probably one of the best setups right now. You have a big inverted head and shoulder pattern that if the Fed truly does shift slightly, whatever that looks like, it's not going to be like the Fed pivot that everybody thinks. I think it's going to be more of a it's going to be more of a slight shift. If that is the case, we get a significant gold rally. And look, if the Fed stays the course, which I think is actually the more likely outcome, gold might actually break down and we might break through the support here. So I think it sets up perfectly, and it all really makes sense going into tomorrow. Don't you all agree?
I agree. And I think the more market rallies and the more the market gets hopeful of a pivot, the more dangerous the move lower is going to be. Yeah. And unfortunately for markets, I think that Powell is not going to be dovish. I think he's going to probably say a little bit more of the same that he's been saying over the past months. And we are going to see another little bit. I think we're going to see a risk-off move coming. I hope I'm wrong for the markets, but I think that's what's going to happen. And remember, Danielle DiMartino Booth told you, Blake, that the Fed is looking, as long as there's no crash, there's no panic, there's nothing to stop them doing more and more, getting more ammunition.
Right. And every she's like every bounce they see in equities. And by the way, let me stop for a second and say, if you guys missed the Trader Summit event because you were out, but you did register for this event. Stelio said it earlier. Recordings will be going out. What did you say? Tomorrow? Maybe today?
Well, awesome. The videos, we're working on the videos that should be ready today. So the email with the recording should go out tomorrow or maybe at the most on Thursday. So it's almost done.
Awesome. So, and if you missed it live because you were out and about, you're going to get this recording. Watch the Daniel DiMartino Booth recording from this, because what Stelios is referencing is what she said to me is, look, every bounce that we see in equities is just the Fed says, hey, I got more room. If the stock market was crashing, which it's not, but let's say the S&P was trading down towards channel support around 3,400 and looked like we were going more towards 3,200 right now, and we were doing one of these, we were down here. Well, the Fed might have a little bit different tune, but every time the market goes up, it just gives them more ammunition to play into. So, and not change the course, because they still are fighting inflation. And I don't know, Ryan, K-Man, Stelios, Steve happens to be sitting next to me. Dale, I mean, has inflation shifted that much to where we've seen inflation come down to 2%? Have you guys seen that happen yet?
No. But the problem, though, is that, again, as Danielle said, the Fed is and most central banks, they look at what they think is going to happen a year or two from now, and is the current policy taking us to the target that we want? So yes, inflation isn't turning, but we're seeing leading indicators turning. So there is a slight reason for the Fed to be hawkish, a slight reason for the Fed to be dovish, because PMIs are turning, and really the lagging indicators, inflation, employment, they're the ones that are still doing well, but I don't think it's enough. I really don't think it's enough for them.
All right. And I agree with you on that as well. So it's going to be interesting tomorrow. And I'm going in tomorrow very well, I'm going to have 0 open positions, and we're going to actually be covering it live because Steve happens to be sitting next to me, and it's the first time in 6 years I'll have him next to me during the FOMC. So we're going to broadcast a little bit, like kind of a special broadcast for the ForexAnalytix subscribers for the FOMC live here. So make sure, if you guys are in the community, make sure you're in the chat room, get in the chat room, and we'll be posting links in there so you can come join us. And I like I said, I'm going to cover it live. I'll have no open positions going into it, I don't think. And so I'll be able to attack the market from either direction, because I honestly I'm going into this not with not a lot of clarity. I mean, I have a lot of clarity on what I think I want to do in either situation, which that's how we prepare for these events. I just don't have any real opinion on which way the Fed's going to go, because I think it could go either way. Let me talk to Ryan and K-Man a little bit, since I haven't had a chance to communicate with those guys much. So gents, what happened in European trade that really had your attention when you're on the Flow Show? And by the way, if you guys don't log into the Flow Show in the mornings, it's free. These guys prepare you for the day. So Ryan, K-Man, what happened overnight that really we need to talk about?
You guys in the US, because of the clock change, you can actually catch some of the Flow Show when you come on, because you're all coming about 11 o'clock our time, which is usually roughly about halfway in. So feel free to come along and join that.
Awesome. Yeah. So I heard, China might be laxing their COVID policies. Is that true? Is that why China's up overnight? Like some of these Chinese markets kind of exploded higher. I mean, look at like Hong Kong and China. I mean, just the Shanghai index. I mean, they've been beat with an ugly stick this year. So is that a thing now? COVID? No COVID?
Yeah, that's the rumor, and the foreign ministry was asked a question about it, and it wasn't a flat out denial. They just said they weren't aware of the situation. So that's the rumor, but it's not going to happen potentially until first quarter 2023 that they even start to look at it. But what the market does, it likes to run ahead of itself. We've had the news, and it's got the risk runnings, but all it's going to take is a denial, and all that will reverse just as quickly. But for now, That's what's going on.
Okay. K-Man, I know you guys talked a little bit about this, but I'm asking for the people that are just joining us now. We have the dollar yen that's dipping back towards that 146 level. I think this 146 level is pretty key. We've come out of this ascending wedge. I'm bearish, even though I just covered my dollar yen short, which I covered it for basically a break even. I was up maybe 30 pips, nothing to write home about. But you got the dollar yen that's closing in towards what I consider pretty critical support. Do you think in anything with the yen here?
Yeah, for the time being, the fundamentals are still not playing in favor of the yen, as I was saying. But I think speculators are perhaps a little worried, especially ahead of the FOMC, about those stealth interventions, because it's an uncertainty, right? If you have Bank of Japan or MOF directed, but Bank of Japan executing interventions, smashing it down 500-600 points, there's going to be a rebound, and speculators can buy that dip. If you get stealth interventions, you never know when or for how much they will be in the market, or whether they just sit on the offer or gently push it down. I'm pretty convinced that yesterday they were there around the highs of the day, because they knew that month-end flows would put up a pressure on it, more than likely. But we were like just hitting those 148.70s and unable to get through it, despite euro dollar coming off, cable coming off, and everything. So that makes it a bit more uncertain for speculators. So I think we are going to be have to be a bit more cautious, especially if that's the way one wants to trade it. So yeah, it's going to be much more interesting, and tomorrow is going to be a very interesting one, because as we remember last week when Timmy Leaks sent out his tweet into the market, Bank of Japan intervened right afterwards, right?
Right, right.
So,
Yeah, that's true. That's true.
tomorrow could be tomorrow is going to be a funky day for dollar yen, in my opinion.
All right. Well, thanks for bringing that to our attention, because I think that's such important information as you go into the next couple of days. And that's why, guys, you got to be listening to the Flow Show. Listening to Ryan and K-Man in the mornings. Well, it's morning for me, afternoon.
And Stel.
Shit. It just depends where you're at, I guess, right? So
He keeps forgetting about me. Don't worry, Ryan.
You
I don't exist. I am nobody to him.
I'm sorry. Who are you? And of course, you get to hear Stelios's opinion on being bullish silver every day. So that's good. Just kidding, Stelios. Love you, man. All right. So really quick, I just want to say, if you haven't checked out the Trader Funding Program, make sure you check it out. This is how you can trade our money, and you don't have to worry about risking your own money. You keep 75% of the profits. All you have to do is take an assessment. And if you think we leave you out there in the cold, well, we don't, because you get to join the ForexAnalytix community for a certain period of time. You get to join, get all these trading ideas, the patterns in play. Come in our chat room. You can go to the Trader Funding Program chat that's right here. You can go into the general chat room, news and research. I mean, I'm just going to show you what's happened since I've been awake this morning. And it's, kind of a slow day. This would be, somewhere around, I don't know where we're at. I said good morning, somewhere around here. But you can see how right here. This is just from an hour ago. So you can see how active it is in our community, right? And then if you don't think that's enough, you can go into our trades room and you can see, this is what Blake just closed out. Oh, this is what, people are trading long this, short that, look, these are trade ideas, guys. And, if you're going to be, out there taking an assessment, wanting trade ideas, want to figure out how to learn how to access our money and these larger trading accounts because you don't have the money or you just don't want to risk your own, great. Here it is. Check it out. See how it can benefit you. All right, Dale, I know you have a guest coming in, so I'm going to pass it over to you. I want to thank everybody for being here. If you're in the ForexAnalytix community, we're going to see you on the Morning Edge in 45 minutes. So, Dale, have a great interview.
Okay, David Hunter, welcome back to F.A.C.E. How are you, David? Dave H. Contrarian, calling Dave H. Contrarian.
Hi.
There we go. There we go.
Hi. Sorry, I was on mute, I guess.
That's okay, buddy. Let's welcome back. Great time to have you here. And
thank you. Yeah,
lot to talk about. Why don't we just start with Dave? What do you think Paul's going to do in his statement tomorrow? Is it going to be a mean man again?
Yeah, it's hard to believe that he's going to be anything but hawkish. I mean, he may. I think he's got a committee that's starting to move in the direction of saying we don't want to overdo this. So I think some of the conversation coming out of the FOMC is going to be more mixed. But Powell himself, I think he's still got his eye on the market. And obviously the market's moved up from 3,500 to, 3,900 on its way to 4,000 here. I just don't think he wants the market moving up. So,
right.
So I have a hard time seeing a lot coming out of this meeting that can be taken dovishly. Now, again, I suspect they're going to make some noise about, again, I don't like to predict levels, but I guess tomorrow 75 basis points. That's certainly consensus, and
right.
and maybe 50 in December. So they might start making noise about that. But again, and I think this is very wrong-headed, but he's bought into Dudley's view that the stock market has to be a lot lower to tighten financial conditions. It's probably going to go down in history as one of the stupidest things that the Fed's ever done, is getting caught up in that and thinking they can be the predictor of where markets should be. But that seems to be the narrative he's bought into. So it's hard for me to see anything tomorrow that's going to be dramatic. I mean, I have no doubt they're going to make some noise about, you know, we need to be cognizant of going too far. We don't, we're coming closer to the end, but I think they're still going to be talking about 5% Fed funds rate and, basically several more hikes to come.
So what do you think is going to be behind a market move or a catalyst to take the S&Ps above this 4,100? This is a weekly trend line from all-time highs, and there's a lot of confluence up there at 4140-ish. Fighting the Fed, is the market just going to be up into their face for the rest of the year into the spring? And even though they continue to be hawkish, that we could still make new all-time highs next year, Dave? Well, how do you think that plays out with the way the Fed is acting? And I saw a headline on one of your interviews that you thought the Fed was nearing a point of no return.
Yeah, they've already gone to that point. I think they've caught, the seeds are sown for a global bust. So they have gone too far. As you know, inflation is a lagging indicator. As you know, the jobs are a lagging indicator. And those are the two things they're watching. So they're, again, I think this is amateur hour at the Fed. I understand they're focused on inflation, thinking they have to see the whites of the eyes of a dramatic drop in inflation before they're going to change, but that guarantees they're going to be way too late. So that's what I mean. They've I think he's gone too far. In terms of the market, I think probably 4,100, 4,150 marks a point from which we could see a sell-off. This is going to be a stair step. It's not going to be a straight up to 6,000. Right. So you could see
really not a melt up this time till the final stage.
I want to be really clear, because people take that term and apply it to everything. It's a bull leg that started, in my opinion. We saw the turn, we saw the end of the bear market or the end of the correction on October 13th at 34.90. We are in a new bull leg. The parabolic part of that leg, which is the melt up part of that leg, is probably 5,000 to 6,000 or 5,000 to 7,000. It's going to be the last stage is going to go straight up. So, it's not that you're going to melt up.
It's at the end of the move.
It's at the end of the move, which is always the case with the parabolic. That's when it comes. So yes, you can call this all a melt up rally because that's what it leads to. But we're not in a melt up, and I get that on Twitter all the time. Okay. Are we in the melt up? We're in a new bull leg. That's what I believe. And that new bull leg started at 34.90, 3,500 on October 13th. But that, let's say we go to 4,100, 4,150 right here, and back off to say 3,900. And again, I'm not saying that's exactly what's going to happen. I'm just saying those are possibilities. And then the next run takes you up to somewhere closer to 4,600, 4,650. That's the kind of stair step I would expect. Now, somewhere in there it will surprise. It could be at 4,100. It could be at 4,600. Could be later where it's going to just blow through and keep going. But all right. Chances are with the backdrop we've got in terms of the Fed and an economy that's going to continue to weaken, that those resistance areas are going to at least cause some sort of a pause and back off before you go higher.
Okay. What do you think of this? It's kind of a repeat of what happened under Volcker, just not at the same levels or magnitude. Is that we do get the Fed, even though they've been extreme, give us a pause, and maybe that's when the parabolic stage begins, and it could be next in the winter sometime. And then we're making new all-time highs, and they have to come in and start to hike again. kind of
Yeah,
a pause and then a hike.
100%. That's my anticipation is that we will see a pause. I doubt that we see a full pivot to
No.
cutting rates again.
No.
But I think as you're seeing, it doesn't take much to get this market going. I think you will see a pause. It could be in December. It could be in January, February. But there's going to be things along the way. Everybody wants everything in linear fashion and in black and white. They'll be, just having some of the Fed members, some of the FOMC members come out saying they're questioning further hikes will be something. It doesn't mean they have paused yet, but those will be things that will add fuel to the upside. So yes, I think you're right that we'll see a pause at some point in the next few months. And it could be sooner rather than later. It's just not likely tomorrow tomorrow.
The bond vigilantes, David, have really had a field day in the gilt market. And I mean,
before we go there, Dale, let me finish my thought. Okay. So yes, you're right that we can move up, and then imagine what it's going to be if Powell sees 5,000 and 6,000 and maybe even 7,000. He's not going to sit there and say, okay, I guess I was wrong. He's going to say, my God, if I thought the market was too high at 3,500, I sure think it's too high at double that. So he's going to come in and tighten again, and that's what really cinches the bust. So again, I keep saying there's a very wrong-headed narrative that is driving the Fed's thoughts. And I can't say whether all the members have bought into that narrative or whether they're kind of just respecting Powell and saying we'll follow along for now. But it's scary. The groupthink right now suggests that they're all on the same, singing from the same hymnal. And it really does suggest that we're gonna take this thing right into the tank. So yes, I think that's kind of, it's not exactly Volcker, but yeah, you could have that pause and then come back again.
Okay. So with Powell conducting this monetary policy, and it's hard for me to believe that they don't know what they're doing. Is there any intention about this? To wreck the economy?
I have little doubt that this is just wrong-headed thinking. It is not deliberate. I understand the thought process out there. I mean, I'm a big New World Order person. I do believe that the Biden administration is doing lots of things that are not just by mistake. I do believe that what's going on around the world is moving us towards New World Order. There's certainly been plenty of stuff coming out of Davos and elsewhere. So not everything is by mistake. Some stuff is deliberate, but I think it's very easy to see that the Fed is just caught in thinking we really screwed up, late last year, early this year. We have to make up for that mistake, and they're just, they're caught up in this. What is really, I think, and I call it the amateur hour, but what I really think is damning is that Powell, even though he gives lip service to understanding leads and lags, does not really seem to understand that you just can't wait until you get results from your policy before you pivot. By then it's too far along. But on the other hand, understand the dilemma they're in. If they pivot too soon and inflation goes back up, it makes their job even harder. So they're trying to walk a fine line is what I think they're doing. And lots of people have agree with me that they're going too far, but lots of people don't. There's plenty of Wall Street cheering them on and saying you got to tighten more. You should do a point tomorrow. You should do 2 points or whatever. There's people that really believe that inflation is going higher. I believe it's peaked, but it's the evidence is not clear yet.
Well, I think it's pretty clear because
what?
Yeah, you know why it's clear? Look at this. Okay, so I don't care what Fed policy is. The minute the Russians killed the UN deal, We have a huge move in the grains beginning again, and I don't see how Fed policy is going to have anything to do with it. In fact, we have an El Nino year out there, and they could take down economically sensitive commodities like copper, etc., but they can't do anything to stop this bull market in grains. And this is not something that's just starting. This is something that's been underway, and we just had another pause, but we're going to new highs in the grain. So how do they control that? Food
Well, I agree.
inflation.
There's parts of it that don't have anything to do with their policy or that they have no control over. I agree with that.
Yeah,
But
yeah.
but we do. I thought you were going in a different direction, which is we do have plenty of evidence in terms of housing. We do have plenty of evidence in
Okay.
terms of lumber prices. We do have plenty of evidence in terms of copper and steel that the economy is getting slammed. And certainly the consumers had built up savings and had things, but even they are really starting to show they've got to rely on their credit cards to keep going. And you hear the reports about, 35% of small businesses not being able to pay their bills, or, consumers not being able to pay all their bills at once. Those are all signs that they've gone far enough and too far. But when I say it's not clear in the inflation numbers they're looking at. And so, they're caught in that. My biggest criticism of them is this whole Dudley thing. I mean, it's just stupid. The Fed should have learned from Greenspan's irrational exuberance that they don't know anything about the markets. Markets will move where they move. That's not, his idea that that's important to tightening credit conditions is just going to create a crack up.
Okay. Well, something that the market has going for it, and I thought there might be some intervention to turn it, and it was the BOJ and the BOE have been in the markets, and the dollar is certainly trying to shift. It actually peaked, didn't it peak? Well, it peaked earlier, and then this was a stock market bottom on a failing rally. So you finally have the dollar starting to at least correct, right, David? And that's supportive for equity prices.
I think the dollar has peaked. I think the dollar is going tremendously lower. Again, it will be a stair step, but I think it is very bullish for both the stock market and gold and silver and all commodities, frankly. So I do think you're at an important inflection point in the dollar to the downside and in metals to the upside, obviously in the stock market to the upside.
Okay, so and really it's been the dollar, right? They call it the wrecking ball. So it looks like first it was BOE with their climactic sell-off here. It looks like a bottom to me. And then everyone poo-pooing the BOJ, saying that their intervention was a waste of money. And yet we're on the verge of turning negative under 146, which correlates to yields. Look how yields are down 11 bips in the 10-year, David, going into the Fed. All these markets are challenging the Fed, aren't they, for tomorrow?
Yeah, it's interesting. And again, I don't know what day to day is going to do. You could have two scenarios. You could either run up into the Fed meeting,
right,
be up near that 4,100 on the S&P, and then have a reason for correction when they don't get what they want, or you could have what I think Goldman or somebody was calling for, which is some signs of them backing off and at least setting the tone to a more dovish policy going forward. And then you just take off. So I think you have to be a little careful given what I think is coming, because I think there still is so much bearish sentiment out there. You have to be a little careful not to just assume that these resistance areas can't be busted through. I think the most likely scenario is that you pull back after you get up to the 200-day, et cetera. But it's possible you blow through there, and then you have the next run before you pull back.
Okay. 200-day up here, confluence with the trend line up here, David. Any other markets or sectors you want to touch upon?
Yeah. yeah, let me just say we talk about the dollar, but the other side of the dollar obviously is the euro, the yen,
Okay.
the British pound, the Canadian
Appreciate
dollar. I think is going to be very strong. I think the story of the next 6 or 9 months is the tremendous opportunities in the alternatives to the dollar. So I think there's going to be a
it.
big run in the Aussie, in the Canadian dollar, in the euro, and I think again when you look, the dollar um, bottomed out at 95 earlier this year and ran to 115. I think you're going to go down the other side of that mountain, and so that's tremendous upside for a lot of these other currencies. The bond market, I think the bond market is
Broken.
no, not at all. I think the bond market has seen the interest rates have seen their highs most
Okay.
likely, and I'm still calling for a 0% 10-year and maybe even negative rates sometime next year, probably later next year, but sometime in the bust. But
Yeah.
no, I think there's another leg down to lower lows, and that's obviously controversial because of the breaks we've had. But either way, whether we see that or not, I think rates likely have a big move down here in the next 6 months, and then beyond that in the bust even lower. So, my call on, for example, TLT, which is a 20 years proxy, I think you can see that up to 200 in the bust. So more than a double from here.
Wow. Okay. Yeah. Tremendous move. I think this was the most persistent weekly declines in history.
Yes, absolutely.
In
And you can
history.
see, I mean, that's what, the overreaction that we've seen in things, and it's hard to say the stock market's an overreaction. It's 25% correction in the S&P is not an overreaction, but the overreaction in terms of the sentiment on the equities and on the bonds, we're nowhere near at this point. I think we're going to be worse than 2008-9, second half of next year, but we're nowhere near that now, and yet everybody's moved to that side of the boat. Everybody's bearish on bonds and stocks, and that's shifting in the bond market. I do think bonds are starting to get some sponsors.
Yeah, I mean, people look at a 4% yield and they go, "Oh, I'll take it. No risk in stocks. I'll take the 4%."
Yep.
So there is an alternative now. So we have both the Fed and we have the alternative that people could get 4% riskless. And this is really going to be an amazing thing, historical thing, to see the market after all this bearish sentiment. And Dave, you don't think the FANG and MAGA stocks are going to lead it? What's going to lead it this time? Because they've been the weakness. There's different sectors that are taking the mantle for a
I think
return to the upside.
I think you're gonna be surprised, because I've been saying for a while it's going to be a broad-based rally. It's not going to be narrow, and so you're going to have both growth and value play. You're going to have both large cap and small cap play. I think rather
even
than FANG,
cannabis.
I think semis are going to go to new highs, as hard as that's to believe. I think steel, which is flat on its back, is going to have a great run. Copper's going to have a great run. Commodities going to do well. Industrials look great. I think the industrials will go on to major new highs. XLI, if you look at XLI. So there's a lot that will play, and I will tell you, the small cap looks poised for a big run. My target on the Russell 2000 is 3,000, and I'm not sure whether it'll exceed that. So there's some big runs coming. I still am calling for the NASDAQ to 20,000. So that tells you've got to have the big tech stocks play in that. I think they will. You came down to some pretty important levels on a lot of things. Now, I have no idea what Meta is going to do, and I don't talk
Yeah.
individual stocks anyway. But the some of the other FANGs look okay.
They don't look as good as this. I'll tell you that.
No,
Russell's one of the better looking charts. A breakout here, Dave.
The Russell looks great. Yep.
Yeah.
You could have a move. I can't see the numbers, but you could move up to.
The highs were up here at 240 on IWM.
Yeah. No, I'm just saying on the way up where that vertical line is, you could have a bit of pause up there, pull back there, and then run. Something like that. But it looks great. I think the small caps are there. And what's going to be a little confusing for people, because I think I'm hearing a lot of narrative moving towards we're in a new bull cycle, or if this is a new bull cycle, you have new leadership. I'm not sure that the true new leadership will come after the bust. As you know, I'm calling for an 80% bear market after we make this blow off. The true new bull market, which will be commodities and industrials, will come after the bust, not before it. So this one's going to still have growth playing, tech playing. Keep in mind, growth has lagged because bonds have lagged. Until bonds get going, until interest rates start coming down, the growth is going to have their day a little farther into the rally. So I just be careful. Too many people want to read into very short-term moves and decide relative strength tells you that this is going to be all value. I don't believe that at all.
Okay, so it's not a new bull market. It's actually the last hurrah.
Yeah, it's kind of funny because if you use the definition, obviously, I don't think everybody buys into it, but the definition is over 20% is a bear market. Obviously, it's a bear market this year, but in a lot of ways, this is just another correction in the bigger secular bull market. It was a cyclical bear for sure, but I do think that when we change leadership, it's more likely to be. You're going to see some of the signs of that change in leadership in this run, but I think the true change comes, in the next after this melt up and break.
Okay. All right. So trading opportunity to the upside, big break, a lot of markets getting hammered after this in the spring, and then from ultra depressed levels, the new bull market. And we're talking about years.
It'll be a cyclical bull market. The secular peak is coming next year, probably first half of next year for sure, probably could be first quarter. So you're going to look at a 40-year secular peak. And then the beginning of a secular bear market that lasts for decades. So meaning you won't see new highs from next year's highs in the indexes, but commodities will be in the move from say 2024 to 2030 will be a spectacular run in commodities, unlike anything we've seen in history. So there'll be places where you'll have bull markets, but it won't be in the indexes.
So
you'll have cyclical bull markets. You'll have a big run from, let's say, if I'm using 6,000 as my top on the S&P for this run up, it could be 7. If it's 6,000, though, an 80% drop would take you down to 1,200. You can go from 1,200 back to 4,000 or 5,000 and have a great run, but it's still within a secular bear market.
Okay, got it. Got the picture. And things like gold and silver could have big runs. Like maybe you could see $60 silver, Dave, and then in the bust, all it'll do is maybe come back to 20 to where it's all starting here. Is that your viewpoint?
That's kind of that would be my best shot.
So it's about a 6-month ride in the metals here too.
Yeah,
and
6 months. The metals could go. Yeah, the metals could go, depending on how fast they go, they might take 9 months, they might take, or 8 or 9 months, or they might take 6,
Yeah.
But I think 50, 60 on silver, I think 3,000 on gold. And then they have pretty stiff corrections and
with the
and then
market,
they're
with the bust.
with the bust, and then on the other side, they will lead the markets for many years.
Okay. Great to catch up with you, Dave H. Contrarian.
Still contrary.
Huh?
I'm
Yeah,
still contrary.
you're such a contrary guy. Anyway, I really appreciate you sticking to your guns and coming here and sharing, because I know it wasn't easy for you to stick to your guns on that break to 3,500. With
Yeah, no, it was funny that day because I came out that morning before the market opened and before the news came out on CPI and said, it looks like we're going to have a successful retest, that you'll turn today. And then we got that first hour that morning and it looked like I was dead wrong, but that looks like that was, basically a successful retest that just broke for an hour.
Right. It did it here too. After all the FANG and MAGA names got hammered, it closed under 3,800, and then the next day, boom.
Yep.
Right back there.
Yep.
They couldn't keep the beach ball underwater.
Yeah, I think it's going to be hard for the Bears to maintain. They've got to be starting. They're still so sure we're going to 3,000 or below, but they got to be starting to question that because this thing just every time you think it's rolling over, it goes the other way.
Yeah, they'll really be questioning it over 4140.
Yes.
So Dave, great talking to you. I appreciate you coming here and updating us with what you're thinking and clarifying clarifying stuff for us. So you could follow Dave on Twitter. He's got hundreds of thousands of people doing it at Dave H. Contrarian. And you can find a guy with conviction when you follow Dave. So if you want someone mushy, don't follow Dave. He's not mushy. All right, buddy. Nice talking to you.
Okay. Thanks, Dale. Have a good week.
You too, buddy.
Bye now.
So that's a wrap, everyone, for Turnaround Tuesday. Good luck. Tomorrow's a big day. You could join the team in 13 minutes on the morning edge. And if you didn't shave, they're not going to let you in the room. So you use your edge in the bathroom before you check into the morning edge. And most of all, don't just count your bushels of wheat. Count your blessings. Adios, everyone. See you guys. Bye, Laura, Frederick, Paul. Adios, Warriors.